Well, hello everybody. Steven Sitkowski here. Welcome to this edition of my Market Insights. It is September 29th, 2025, getting ready to move into fall. We'll be skiing in no time. I'm excited about that. Kind of bizarre that the markets aren't a little more animated, given what's going down at the government level, where adults act like children, that deal that we go through, it seems like at least once a year. In any event, glad to have you here. Let's see if we can make some sense out of things. I'm sure we can. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. Don't take anything I say as a buy, sell, or hold recommendation. These are just my observations of what's going on since I've got to study this. And a lot of you, you're on to other parts of your life, probably don't pay a lot of attention, maybe, to the financial markets. So I'm here to try to make sense of it all. What's moving the markets? Government shutdown looms. Dun, 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 dun. That is tomorrow. There's all the normal finger pointing, name calling. Well, in this case, now we have the president threatening to fire a bunch of government people if there's a shutdown. And he said he will fire them permanently. He goes, I don't want to do it. Okay. Well, if you don't want to do it, don't do it. But in any event, I'm sure this will get resolved at some point. Typically, it doesn't make a big difference in the stock market because Wall Street knows that it's temporary. It's how long do you think these people are going to go without checks before they go, hey, let's come to the table, you know, and make something work? It is all posturing. It is so childlike. I'm so tired of, every year we go through this. Every year somebody's running around, the sky is falling. It's like, for goodness gracious, just figure out what is right, right? What is right for the American people. Do that, put it into place, whatever that happens to be. The problem is everybody's got their own agenda, the agenda they think that'll make them look the best. I think it has very little to do with what they believe is right. AI stocks are in focus today. NVIDIA was up a couple of percent, and AI related stocks, they kind of took a little step back last week, but charging ahead today in spite of this potential government shutdown. It looks like the S&P is going to close up for September. September is typically the worst month of the year. So it really shows you the resilience that we have in this present market. 10-year Treasury, exactly where it was this time last week, 4.141. And oil prices dropped a couple bucks today, down to 63.05. And it's been in that range for a while now. Market breadth, some good news here. I always like to look at two things. First, I look at advancers versus decliners. Not so great. More stocks went down on the New York Stock Exchange. Same with the NASDAQ. But when it comes to 52-week highs and lows, check this out. 312 to 107. Pretty good indicator of where the trend is, right? How about on the NASDAQ? 692 compared to 209. So definitely we're in a bullish trend. Our trades and our trade ideas have been bullish, bullish to neutral. The winners for last week, Intel, I had to make some adjustments on some covered calls midweek on this. Intel jumped 20% for the week, Teradyne 12, EA, so that's going private in a $55 billion deal, up 11, Halliburton, oil related, XL Energy, about 10%. EQT, I always feel like I'm saying, hey, cutie. EQT, up about 10%. Centene, ditto. Molina Healthcare. Healthcare's been a real lagger this year. Texas Pacific, Land Company, 9%. Devon Energy, I haven't seen them show up in a while, almost 9%. GDP estimates are definitely on the rise. I mean, look over here. So this is the Atlanta Fed. We're getting right close to what, 4%? That's a very healthy GDP. Um, Unfortunately, not everybody is participating in it. We have very much of a bifurcated economy where the people at the top seem to be doing great and spending money and life is good. And by the way, I saw some happiness quotient where, people are making over $100,000 a year, which is not a hell of a lot of money these days. They're happy, and the people below that, not so much. And who could blame them? With this round of inflation we've had, they got to be struggling. But the GDP number, frankly, surprises me. Consumer confidence has been fading. So, people know kind of what's going on. And I think there's a lot of people who really don't get much of a voice, who are out there struggling. So when they're asked, how are things going? Not so great. What to watch this week? So it'll be an interesting news week. And I'll explain to you why. Some of what we were hoping we would learn, we may or may not learn if the government shuts down. So Monday, we got Fed speak. Pending home sales jumped higher by 4%. That was a surprise. It was supposed to be flat. On Tuesday, job openings, assuming we get it, um, supposed to come in at 7.1 million. Last month, 7.2 million. So the job openings has been creeping lower. Consumer confidence is supposed to be lower than it was the previous month, from 97.4 to 95.8. I got some more Fed speak. So the ADP number, now we're going to get this number, but look, it's expected to have fallen from 54,000 new jobs created down to 40. So we're seeing new job creation coming down. We're starting to see unemployment and initial jobless claims tick up, although the initial jobless claims last week was really encouraging. We'll see what it looks like this week. Assuming we get the number, they close down the government. We will not, even though they know the number now, they're not going to release it. Here's the initial jobless claims. So they're expected to come in at 228,000 last week, came in at 218,000. They were expecting it more in the neighborhood of 230,000. And then again, under the heading of who knows if we're going to get this, but the government's forecasting 45,000 new jobs as compared to 22,000. Unemployment holding steady at 4.3. Jerome Powell forecasted, that's chairman of the Federal Reserve, that we'd be at 4.5 by the end of the year. We still may get there. Hourly wages year over year now moving up 3.6%. After tax, that won't even keep you current with inflation. 3.6 after tax is about 2.8. Latest round of inflation was 2.9. So you got to have something else going on. You got to learn how to be an investor. And the ISM services, I expected to tick down just a little bit from the previous month. Nothing that's going to be market moving. So If we get a shutdown, we're going to be missing some of the data. And probably the only thing we'll get is the ADP number. So it is what it is. Chance of a government shutdown is now around 85%. Isn't that crazy? It'll be temporary. Again, the markets don't typically react much to this, which is surprising. It's because Wall Street doesn't take the government serious. Who could blame them for that? Last week's heat map. So the winners are kind of on the right hand side, which is mostly defensive. Tesla was up, and we can see, over in the consumer discretionary, fair amount of green, industrials look good. Utilities, that's where people are moving to more defensive along with energy. Although healthcare, which is typically a defensive play, didn't have a good week. They're in the red. Oracle had a big pullback. Pretty mute looking. Not a lot to talk about there. And market sentiment for the week on the bullish side stayed exactly where it was from the week before, which is elevated from its historical norms. But we saw the bearishness drop from 42% to 39. So now there's more of a bullish sentiment than bearish sentiment, given the fact that markets are trading right at all-time highs. That makes sense. Let's take a look at the charts. Everything is in the charts. What I tell people, when folks ask me, what's your opinion of such and such stock? Here's my answer. My opinion doesn't matter. It's the market's opinion. Well, how do I find out what the market's opinion is? You look at a chart. So we're going to pull up the S&P 500 using the ETF SPX, and it looks fantastic. I mean, you cannot have a more ideal looking picture than this, especially in light of the lunacy that is all around us. So markets are doing great. That 50-day moving average, look at how it is acting as a support level and has over and over again. Let's take a look at the Qs. It's the NASDAQ 100 Trust. It looks every bit as good. And again, look at that 50-day moving average hold. That's exactly what you want to see. So we're going to be watching, see if they can play nice and the government figure something out. If not, we'll be watching to see what the impact of all that is on the stock market and let you know. All right. Have a fantastic rest of the day, and I'll be seeing you soon. Until then, be safe, be blessed, and bye for now.